Good morning traders and welcome to NAGA Academy's weekly market outlook. Today we will be analyzing a variety of instruments on different asset classes. Our first instrument is the crypto NEO. As we can observe on the NEO versus the US dollar 30-minute chart, we can clearly see that the crypto has been trapped in a trading range, with the upper boundary set at the 22.40 price level and the bottom boundary at the 20.50. The sideways movement can also be supported with the directional movement index, with the plus DMI and minus DMI in choppy directions, as well as the ADX trading below the 25 price level. Therefore, we're expecting the NEO to consolidate slightly, finding resistance at the 22.40 and support at the 20.50. At some point, we will expect a break on either side, and once we do observe a valid penetration, we're expecting either upward movement to approximately the 24.50, or if it breaks to the downside, we're expecting further downward movement to approximately the 18.50. Our second instrument is the Euro versus the Turkish Lira. EURTRY has made the top and corrected to the downside, only to retest the top at the 8-point price level. Since then, it has been correcting sideways and found support at the moving averages. It has also formed an uptrend trend line, and the RSI is currently well above the 50 price area. We're expecting the Turkish Lira to continue its upward movement and break above the 8 price level. Once it does so, we're expecting further upward movement to approximately the 8.80 or even the psychological round number 9. Our third instrument is the CAC index. The French index has made a top at the 5,510. Since then, it has corrected to the downside only to make a bottom at the 5,380. It is currently correcting back to the upside, and we're expecting the CAC index to find major resistance at the 5,450. where we can see an inside resistance level as well as the 50% Fibonacci retracement level. There is also a possibility that the CAC index will continue its downward movement from its current trading position. Our fourth instrument is the New Zealand versus the Swiss franc. New Zealand Swiss franc has been trading in a strong downtrend and has formed a trading channel. We can currently see that the New Zealand Swiss franc is trading at the 0.64 price area, which can also be considered as a strong psychological support. The RSI is trading well below its oversold area and is currently making a divergence, since price is making new lows but the RSI indicator is failing to do so. We might observe a bounce to the upside, where it will most probably find resistance at the 0.65, which will conclude of a third touch on the return line, as well as a retest of the previous support, which has now become resistance. Once price reaches this area, we're expecting New Zealand Swiss franc to continue its further downward movement to approximately the 63 price level. Our fifth and last instrument is the Coca-Cola stock. Recently, Coca-Cola stock announced they had bought Costa Coffee. As it is well known amongst traders in the New York Stock Exchange, there is a say which goes, buy the rumor and sell the fact. In this instance, as Coca-Cola announced they bought Costa Coffee, we can clearly see that the stock has rallied to the downside. It has broken an uptrend trend line as well as a major support level. It has also broken through the Ichimoku cloud. We're expecting the Coca-Cola stock to correct slightly to the upside in order to retest their 45.40 area, which consists of the major resistance as well as the Ichimoku cloud. Once we observe a retest, we're expecting the Coca-Cola stock to continue its downward movement to approximately the 43 price level. Thank you for watching NAGA Academy's weekly market outlook. We wish you successful trading and hope to see you soon.